Welcome back. Now, the Bureau for Economic Research's retail survey declined in the second quarter. The survey shows weaker sales and deteriorating business conditions were the main contributing factors to the slow landing. Even though the BER has warned retailers to gear up for softer consumer spending in the second half of the year, mild inflation and less restrictive monetary policy moves are expected to provide some relief. And joining me for further analysis is the BER's junior economist, Nomvelo Moima. Nomvelo, thanks so much for your time today. And it's been interesting to see the divergence in the data, the morale data coming in weaker, but while we are seeing the hard data like the retail sales figures coming in stronger, does the survey then allude to just slower spending moving forward?
Thank you for having me. Yes, exactly. We saw the latest StatSA data, retail sales coming in at a really solid performance, around 5.1, 5.2% year-on-year growth. And what the survey points to is just a moderation in growth. What we say in our release is that we expect softer, but still to see growth coming through in the second quarter, and we expect the consumer still held up pretty well, despite some of these headwinds that they're facing with the lack of adjustment to their tax brackets, inflation adjustments to tax brackets in the final budget, as well as an increase in the fuel levy. And we'll see in July municipalities increasing electricity levies as well. So these headwinds the consumer faces is kind of not encouraging to see such robust sales volume growth.
Yeah.
But maybe in the coming months, because it's still the first month of the second quarter, you might start to see the sales start to dwindle a bit, even in the hard data.
So it's not something to be concerned about in the sense of we're not going to see consumption growth at all. It's just going to be at a slower pace.
Exactly.
All right. Talk me through some of the pressure points then that we saw in the second quarter survey. Where were the pressure points? Where were retailers feeling the most pain?
The retailers that felt the most pain were the hardware retailers. We saw that durable goods retailers' confidence overall declined, but furniture retailers had an increase in confidence. So the overall decline in durable goods retailers' confidence was from hardware retailers, and we also see this in the StatSA data. Hardware retailers in the first quarter was the first time they actually registered year-on-year growth. It was a small amount of year-on-year growth, but it was 0.2%. And you see that their confidence has now fallen in the second quarter after being surprisingly optimistic for the past year. Their confidence has now fallen, and it's just to show that there's this loss of momentum. There was this build-up that there would be some positive improvements and some activity in this sector, some demand there, and now it's just fallen away and their confidence has pulled back. And then we also saw the non-durable goods retailers. So these are your retailers. Our retailers are normally the smaller retailers, not the big general dealers like Checkers and Woolworths.
Yeah.
You see general dealers in the StatSA data do really well, but our retailers, smaller retailers, struggle. And you see that in their confidence as well as their business conditions. Also, their profitability is really weak. So those are where the pressure points were in this survey round.
And what I'm noticing here is that we are seeing consumers really spend on needs, right? So your food, clothes here and there, but luxuries, I guess, something like renovating your home, we are seeing a pullback, right?
Yes, you are seeing a pullback in those big, purchasing decisions.
Yeah.
But I think what we try to put across in the survey release is that you still see new vehicle dealers being really confident compared to where they were same time last year. In the second quarter of 2024, their confidence was at 10%. Now it is at 42%. So it isn't necessarily that consumers are only spending on necessities, but they are definitely feeling the pinch.
And just on the motor dealer side and looking at those NAMSA figures, right? We are seeing pent-up demand from last year. This, of course, on the back of, lower interest rates coming through. Is it really a strong, stable recovery, or are we just seeing consumers coming back into that market because conditions are changing and things seem to be better when now getting debt?
Yes, it is the less restrictive monetary policy that's helping come pull through that demand. And I think the pent-up demand was, we saw it mostly hit in October after the first interest rate cut.
Okay.
But what is encouraging in the new vehicle market specifically is that we've seen growth since October. So it is that there's an expectation that this market will recover to its pre-pandemic levels this year if this growth continues. So again, just to show that consumer health isn't particularly in good standing, but there is some bright spots in certain sectors, and I think that is highlighted by the new vehicle dealers.
All right, so consumption really holding up well, households holding up well. With that being said, talk to me about your outlook then for retail activity into the rest of 2025. We can chat about the second half at large. I mean, there are expectations that inflation is going to tick higher in the second half of the year. We mentioned those headwinds like the fuel price levy coming through. We're also seeing tensions building up in the Middle East, and that, of course, spiking up the oil price. And if those gains hold, we will start seeing that coming through to fuel price hikes and potentially inflation as well.
Yes, so the tensions in the Middle East are, not very positive for our petrol price outlook. So we should expect to see, not maybe next month, but maybe in the next coming months, that you see petrol price start to pick up slightly. But transport inflation's in deflationary territory at the moment, and that isn't expected to change much in the near term. So in the second half of the year, a lot can happen, a lot can change.
Uncertainty remains the name of the game.
Yes, exactly. So with all this uncertainty, it doesn't bode well for confidence, whether it be consumers or retailers. So we are keenly awaiting the FNB BR Consumer Confidence Index that is being released next week, Thursday. And we'll see how consumers have responded to all this uncertainty. Even though we've gained some areas of certainty, there's just a lot of hanging up in the sky at the moment. So we'll see how that affects their willingness to spend. And depending on how that print looks next week, you can just solidify the fact that you do expect consumers to pull back and for retail spending to decline in the second half of the year. But in the second quarter, we still expect things to be considerably strong. And I think the April print confirms that.
All right, Nomvelo, thanks so much for your time and just sharing analysis on that survey. That was junior economist at Bureau for Economic Research, Nomvelo Moima.